After the recent sell-off in Nvidia, it's now bouncing by 3% today. Bitcoin seems to be bouncing off the $60,000 level. The dollar seems to be pushing higher, and gold isn't doing much at all. In today's video, we'll be talking about setups, ideas, things that I'm looking for, and the rest of this week, which actually starts to heat up as we get closer to that Friday PCE number. Let's jump in. And as we get started, I wanted to remind you guys that we are doing our VIP 50% off sale right now. If you haven't already heard about this, you can currently get 50% off all of the trade notifications being sent by my team and I. Within the group, you can see all of the trades being shared by myself and Frank, things we're buying, things we're selling, and more importantly, why we're doing so. If you'd like to join, there will be a link down below in the description for you to speak directly with a team member on my team about the membership. You can ask any questions you have there, and you can also get 55% off if you DM us using the first link in the description below. So this morning, consumer confidence came in at 100.4. This was in line with expectations of 100 and shows the consumer is still feeling the pinch of inflation, but still staying in there overall relative to expectations. Again, remember, rising inflation, of course, has a negative effect on the consumer as things become more expensive. And in terms of a reaction from the market, gold didn't move all that much. This morning, it's just been back and forth. But if you take a look at stocks, you can see same thing, very choppy. And I think that for the most part, the dollar moving higher here actually has a lot to do with inflation expectations for this week. We have the PCE number. And one thing to note is that the oil market has actually been on the rise recently. And when you see oil pushing higher, this is always a little bit of a concern on the inflationary front, because remember that rising costs in the energy department can lead to rising costs in everything else, which is also known as inflation. Going back to the dollar for a moment, again, if there is some inflationary data that is not super promising on Friday, we do have the PCE number. In fact, I'll show that to you. PCE is expected to report on Friday at 8:30 a.m. US Eastern Time, and if this number comes in hot, that would not be pretty. Now, of course, that would be good for the dollar, which would push higher on higher than expected inflation data. But if it comes out light, the dollar very well could head back and retest this area of 105.2. From a technical perspective, this 105.2 level has been really strong. You can see both the sellers took control of it for some time, but then when buyers were able to break through that level, they found support very nicely and pushed off with this big green candle. So if you do see price retrace and come back into that 105.2 level, my first expectation would be probably you see a bounce there. In terms of the dollar index, I would also not be surprised if we do continue to see price push up to that 106.4 level, because again, you see other central banks really looking to cut interest rates. Meanwhile, the Federal Reserve still seems hesitant to really cut rates. We actually heard from some Fed members this morning, Bowman, who had something interesting to say. Fed Governor Bowman says she's still open to raising rates if inflation doesn't improve. And this narrative definitely has some positive effects on the dollar. Remember that if Fed members are still looking to be relatively hawkish, when we have other central banks globally seeing the appropriate time to cut rates coming soon, that could lead to some continued dollar stubbornness to the upside, which, by the way, could also have negative effects on certain areas of the market, like the S&P 500, the Russell, which is trading lower today, could spike the VIX, and definitely not good for gold and silver, because, of course, gold and silver are very much looking for rate cuts this year in order to really push higher, not just in the US, but globally. So I'll get back to that subject in just a moment, but I wanted to show you some more data as well. So while we're on the topic of inflation, again, inflation came down very meaningfully in 2023, but then kind of has stalled out and gone sideways. I'm talking about US inflation particularly, but let's look at our European counterparts for a second. What you can see here is that in the olive green and the darker green, the UK and Europe have both seen continued progress in their inflation. Meanwhile, the US saw early success, but now has really sticky inflation problems that they're dealing with overall. And the Fed does not like this. They do not like this divergence, right? This blue level being, again, the US inflation. In fact, let's narrow this scope a little bit. We'll reduce it down to just 1 year of data. You can see that, again, we are seeing stubborn inflation in the US. Meanwhile, European counterparts are actually seeing some progress in the inflation down to that 2% target. And the reason I point that out is that if you're somebody who's watching the dollar index, again, this dollar index could continue to look strong relative to its peers due to that stubborn and sticky inflation. We do get PC on Friday. That is why I think that variable is very important to this puzzle, is whether or not, if you're getting inflation progress, that could be good for the kind of prospect of rate cuts this year. But if you get sticky inflation, the dollar index very likely could see 106. So we'll have to wait and see on that. And of course, we also get jobs data in coming weeks, as well as, next week on Friday. And we also have, of course, CPI data coming after that. So it's a really, really important next couple weeks for the financial markets. Let's take a quick look at gold and silver. So if we take a look at gold here on the 4-hour chart, I do have a long position still on this one. Has not moved very much from my position. It's still very flat, but we've gone all over the place. We shot up, we came back down, we've gone sideways. And my thought process on gold here is that, if you're going to see gold move higher, it's going to be, if you're going to see a real big push to the upside, it's going to be the final domino, which is the US, falling in terms of their expectations for rate cuts, right? If the Fed starts to say, yeah, rate cuts are more appropriate, and we do get that 1 to 2 cuts this year, gold is going to have a huge push higher. But if they don't, if the US says inflation's not going anywhere, we can't justify rate cuts, gold will struggle. However, I think gold buying still remains strong enough to hold, even if the US does not cut or doesn't have super dovish expectations going forward, because other central banks are already starting to cut interest rates. The Bank of Canada, as I showed you with the EU and UK, they are seeing it appropriate to cut rates. The EU has already started to cut rates, and the UK seems to be up next. And so you have all these central banks starting to cut rates. The story for gold in that environment looks good, because remember, gold is not just about the US, it's about the other central banks as well. That being said, for gold to really see upside, I think you also need to see the US appropriately start to expect cut rates or rate cuts, right? That is what really will be very important to the gold bullish case, is finally getting the dollar. Until that happens, if the dollar, if we see, the Fed really kind of turn hawkish from here, the dollar, I think gold will remain sideways to lower. But if you do see some progress on inflation this week and jobs data continuing to cool, gold could very well see a push back to the highs and beyond. That would be my perspective and my opinion for the remainder of this year. I've been very clear about that for some time. Part of the reason for that is that the Edgefinder's top setups page still shows gold as a very bullish reading. Now, this is not, I've had some people say, well, Nick, gold hasn't gone anywhere for weeks, or it's gone down in the short term or something like that. Please understand, the Edgefinder is not a holy grail. I wish it was. We'd all be, sipping pina coladas on the beach, but of course, trading is harder than that. The Edgefinder is showing a bullish reading, which just means that when looking at the economic data, technicals, and sentiment according to this rule set, we're leaning bullish. That is not a guarantee that we're going to go bullish. And that's why when you look at my positions, I have what is called a stop loss order, right? Stop loss just says this is where I need to stop the loss if it's not working out. So I could be wrong on this idea, but I think that I'm right. I think that we have upside on gold, but it is just it is an idea. It is not a certainty. It's not a 100% chance that it works out. So again, whenever you take a trade, you have to accept that there is risk involved. Speaking of taking trades, I also took one yesterday that's actually working out great. I went long Bitcoin inside of our VIP room. I'll show you what that looks like here for a moment. If we go over here to the position trades section, I actually picked up a long position in BTC, which is a longer term position for me. And my thought process on this in terms of Bitcoin is, I've said this many times, but I think that the asymmetrical potential returns of Bitcoin are really good. And what I mean by that, without sounding fancy, is basically if Bitcoin continues to be a thing for years to come, I think that over time it will continue to see more adoption. If that is a good idea, and I'm right about that, then the price of Bitcoin should go up parabolically over time. But if I'm wrong, and I'm not 100% certain on anything when it comes to trading and investing, if I'm completely wrong, I lose minus 100%. So if I lose all of the money invested in Bitcoin, I accept that. That's part of the investment idea. This is a super highly volatile instrument. But if I'm right, then the potential upside is infinity%. Again, I'm not a crypto Super Bowl or anything like that, but It continues to be adopted more and more over time. It's had a nice little pullback here recently off the weekly chart. I like this level. And again, I think we have upside. So I think that we do see, crypto continue to have a place in the future of finance. And if that is the case, and I'm right about that, I'll be nicely rewarded. And if I'm not, I'll take a controlled loss, because even 100% is not a big position on my account relative to the account size. So just something to think about is, whenever you buy crypto, you are risking 100%. You have to accept that it could go to absolute zero. I'm willing to accept that. That's why I took the trade. So yeah, that is something to at least acknowledge for anybody who touches crypto or anything highly volatile for that matter. It could go to zero and you can lose 100% of what you invest. Taking a look at the Euro USD, it does seem like we put in a little bit of a short-term low here, double bottomed off this level, pushed up and found resistance right around this 1.074. So for my currency traders out there, again, the Euro looks kind of struggling against this recent dollar strength. If the divergence between the Fed, ECB, and UK continues, I would imagine that the euro dollar could see lower prices, but it very much depends on what we get out of this PCE figure this week. If you see inflation come in very, very light for the US, if it's surprisingly low, the euro may actually start to reverse here, which might also be an interesting signal if the US economic data starts to roll over. But if you continue to see strong economic, PCE numbers, this could just be a continuation play. And again, if we get a hot PCE figure and you get like a break and retest, I really like that setup for continued downside on EU. Pound dollar doing something similar. It just broke recently through this level of support. It's now retesting that area. Again, I don't have a strong conviction either way on the dollar in the short term until we get PCE, but something to watch here on that retest of this broken level of support. Dollar yen broke out of this key level at 158. If this price pulls back, I would not be surprised if buyers stepped in, although I don't really have, again, a technical or a fundamental setup on this one just yet. It is not showing up on the Edge Finder's top setups window, so I probably won't trade it. But it is interesting to watch dollar yen continue to break through highs. This retest from a technical perspective looks really attractive for more upside. We'll see if that plays out. Also, as I close out today's video, I just wanted to mention that if you don't already have a brokerage or you're looking for a better brokerage, I've got several links down below in the description that will allow you to trade directly on TradingView and have special sign-up perks for you if you're interested. Check out the links down below in the description. Again, some great free perks. I mean, you just have to sign up for a brokerage account. So if you're in the neighborhood or you're searching for a new brokerage, check out the ones down below. You'll be helping out my channel. I really appreciate it, but also you'll get some extra special perks just for doing so. Thank you very much for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.